There we go.
Hey everyone, and thanks for jumping back into the Cryptoverse. This is NFA Live. We do this every single Thursday. We, of course, rotate it around. Sometimes it's on my channel, sometimes on Rob's or Guy's. Make sure you subscribe to both of them if you haven't already. How are you guys doing?
Fantastic.
Yeah, good, thanks.
So we're going to talk about a lot of stuff today. We want to start off with talking about the spot ETF stuff. I know Rob just made a video about some of this stuff relatively recently because the BlackRock CEO was talking on air last night, and so just maybe get some thoughts there, but also the idea of everyone seems to be listing Coinbase. We also know the SEC is not too fond of Coinbase, so how do we square all that up? We're going to talk a little bit about Litecoin. The halving is basically a month away, so we'll talk a little bit about that. Ether, Bitcoin, one of my favorite topics. We'll discuss that and what is the outlook. I also want to talk a little bit about NFTs and what are we looking at there? Because some of them have been getting hit pretty hard recently on their Ether pairs, so like their Ether valuation. And the last thing I want to talk about are the recession stuff. I mean, like, is there any reason to worry about recession now? Or is it still somewhere off in the nebulous future? But why don't we go ahead and jump in? First question, Rob, I'm going to start with you because I know you were just talking about this, I think, yesterday. You're talking about the BlackRock CEO talking about Bitcoin and the bullishness of it. But like many of the spot ETFs have been refiled, right? And they're all listing Coinbase. What do you make of this? Does it improve their chances? Does it decrease their chances of getting approved? What do you think?
I don't know, but before I start, Guy put out a tweet and he talked about the reason, and Larry Fink came out, BlackRock founder and CEO, and said, this is a global commodity. And it made me, like, I'm not a very bullish, hypey person, and that was one of those comments where I had to step up and go, excuse me, what'd you say? And I think it's a bigger comment than what even I thought about it. So everybody, there's a guy did I think an entire video on this whole thing. But I will say this. So everybody's excited about this ETF, and I'm not so sure that it's going to be the greatest thing of all time. I remember in 2017 when the futures came out. There was a futures ETF for Bitcoin, and everybody thought it was going to be the greatest thing, and we were going to go to the moon, and that's what collapsed everything. We've had multiple futures come through. Now with the spot ETF, people are like, but Rob, you don't understand. It's because they have to buy the underlying asset, and that's way different from the futures. And I'm like, yeah, but remember, it's still BlackRock, and it's not like they are the fuzziest, warmest people out there. It's all about making profits. So if they're going to come out and they're going to do this, just sometimes take it with a grain of salt, because I don't know if this is going to be the ultimate fantastic thing. And then some people will say, well, this has to go through because it's BlackRock, and BlackRock owns the SEC. And you got to understand something. The SEC didn't approve other spot ETFs, not because the documentation was incorrect and they just wanted to correct it. They didn't approve it because there was manipulation, like they said it was. There wasn't approved because of a plethora of reason. The reason why the SEC didn't approve these spot ETFs is because they didn't want to, and the agenda in the White House is they don't want to move things forward. So I need everybody to pretty much understand that there was a document that came out directly from the Biden administration, which talked about how dangerous crypto and digital assets could potentially be. So when everybody says, but Rob, you don't get it, BlackRock owns everything and they're going to go through, we're going to see. We're going to see how this works out. But to me, I don't think it's a slam dunk. Now, them going through Coinbase, which I think is odd, that Coinbase is at odds with the SEC and they're going through that. I just feel like I just see it and I go, is that the right custodian to go through the ones that are dealing with the SEC? Or is it just like, well, that's a separate entity of Coinbase itself and that has no relevance? To me, it just looks interesting how they played it out. So do I think it's going to be approved? I still don't think it's going to be approved. And I hope I'm wrong, but I will still stand by that and we'll see how it works out.
I mean, your predictions about this ETF stuff have been pretty accurate for years now. So
yeah, I'm right until I'm wrong. That's really what it comes down to.
Yeah, but I mean, there's truth to that. But yeah, that's the thing, though. It's like I think you acknowledge eventually one will be approved. It's just like we keep getting ahead of ourselves.
Right.
Guy, what's your view on this? I mean, how do we square this up? People are listing Coinbase. SEC is also going after Coinbase. So where do you see us? Where do you see this landing?
Yeah, it's an odd one, isn't it? But I think, I mean, as Rob touched on, Coinbase is being sued because of unregistered securities. That's what the SEC are going after them for. The custodial business is separate, and that's obviously the kind of setup that you see in plenty of TradFi firms. So, to the best of my knowledge, the SEC hasn't ever come out and questioned Coinbase custody. I can't remember any time where they've where they've gone into bat against that. And when it comes to sort of overall security, I mean, Coinbase's record is pretty much spotless when it comes to securities. So as a custodian, as a crypto custodian, I don't think there's probably any better in the business. And I mean, the SEC does this weird thing, doesn't it? Because on the one hand, it kind of suggests that banks are the right entities to be custodying crypto. But then at the same time, they're also discouraging banks from holding crypto on their balance sheets. So it's kind of this, we've got this classic sort of SEC situation, isn't it? It's sort of saying one thing, doing another, and no one's any the wiser. But I think that distinction between the custodial arm of Coinbase and everything else that Coinbase does, I think that's important. That could, I mean, I've seen people speculate that if the SEC were to sort of really come down hard on Coinbase, if the judgment wasn't to go in Coinbase's favor, then there could be sort of big TradFi firms sort of eyeing up Coinbase's custodial arm, and that sort of underlines the fact how much of a kind of not separate entity but discrete entity it is. So I think that for me sort of makes as much sense of this situation, I think, as it's possible to make. Coinbase custody is, to all intents and purposes, not the entity that's being sued for selling unregistered securities. You marry that up with Coinbase's security record. You also, again, this thing we've discussed, this thing that also seems to make very little sense is obviously Coinbase is a publicly listed company with approval, with approval for its listing from, of all people, the SEC. So there's that angle as well. And then there's also the fact that BlackRock and Coinbase are sort of fairly close, aren't they? They're connected through Circle, and BlackRock, if I remember rightly, custodies the assets backing USDC. So there is this kind of connection between BlackRock and Coinbase, which helps explain for me why BlackRock would choose them to do it. So, yeah, you can't get away from the fact that on the face of it, it doesn't make a huge amount of sense. In terms of but as I say, there is this fact that Coinbase custody is somewhat separate. And going back to what you were saying about the likelihood of the ETF being approved, Rob, yeah, I think we touched on this last week, didn't we? And I'm kind of 50% with you on that. I also feel that, like, if this is the time, then it's the time. Do you know what I mean? And if not, as Ben said, it is going to get approved at some point. And if now is the right time, then that's how it'll pan out. But yeah, I personally think it's more likely to get approved than not. But let's see. I think the early August is the sort of big date. So let's wait and see where we are by then.
Yeah, I mean, I think that's a fair point. Separate products, separate ideas. By the way, I think I'm seeing some comments, people saying that there's an echo. So I guess if you're not talking, just mute. Maybe that'll help the echo situation.
Oh, is that me? Sorry.
No, I don't know. I mean, you were the one talking. I don't know. But I just saw some comments people saying echo. But no, I think that was those were great assessments of the situation, right? Like, yes, Coinbase is gone after by the SEC, but another thing too is that Bitcoin's not really in that security idea anyways. Perhaps that'll be a point in their favor. But I think the views are appreciated. The next thing I want to go to is something that we spoke about last week. Guy asked me about Litecoin, so I'm going to fire right back and ask. So normally when it comes to Litecoin, I should say we always get some hype around Litecoin around its halving. I think its halving's next month. Normally it tops out before its halving. So I guess, do you see any reason for the rally for Litecoin to potentially continue, or for it to sustain itself for longer than like this month? Because again, I think the halving's early next month. Do you think there's any reason for it to continue going, or do you think it's more likely to play out how it normally does?
Who do you want to field
I'm
this
going
one?
to start with you first, Guy.
Okay. Yeah. I mean, Litecoin still seems to be pretty popular, doesn't it? And I think this narrative of it being the silver to Bitcoin's gold, that still seems to be holding up. Someone pointed out to me recently that Google search trends for Litecoin have gone up recently. I guess that's kind of related to the halving as well. I think probably, in terms of it comes back, I think, to a lot to this dreaded sort of securities designation. I guess if you were to ask me which other crypto besides Bitcoin, has the best chance of not being declared a security, I would put Litecoin sort of fairly near the top of that list. I think there isn't a huge amount happening there. I don't think it's all that possible to point to this, with any certainty to any third party driving the expectation of profit. It just seems to, Litecoin just sort of seems to exist and has done for quite a long time. Okay, there was the upgrade last year that put in this privacy preserving sidechain, which you could argue is proof of development. I think that's also something to be aware of, because you might remember that Litecoin got delisted from South Korean exchanges in the wake of that upgrade, and I think that privacy aspect of it is something that regulators do get their knickers in a bit of a twist about. So that's a potential trip hazard for it. But yeah, and it just seems to keep on going. There's also the fact that it got listed on EDX markets, didn't it? This big sort of institutional exchange that they've just launched, along with Bitcoin Cash, Bitcoin, and Ethereum. So yeah, it does seem like Litecoin sort of just keeps on chugging along. So in answer to your question, is there going to be, can it sort of keep doing this post halving? I can't say with any certainty, but I think there's a good chance it can. Yeah.
Fair enough. Yeah, I mean I think the non-security narrative is one of the prevailing ones, but so yeah, there's some interesting aspects there. Rob, are you in agreement in that? Do you think the rally is gonna fade? Where do you stand with Litecoin?
No, I think I echo everything that the guy just talked about. And I'll make this quick. Is Litecoin's it's been around forever, and people seem to prop it up and they love it. One of those guys being Tom Crown, friend of the show, he loves Litecoin, and it seems like the people in that camp, they just can't get away from it. And any of you look at, there's Benny, do me a favor and throw up my screen. I mean, you take a look at like transaction fees and things like that compared to and this is what Guy just talked about, that the new exchange, I forgot the name, EDX, EDNY, whatever. I mean, they're going to list it. It's like the big four, it seems like. Bitcoin Cash, sure, Ethereum and Litecoin. And like, just for like transaction fees and privacy, I mean, the transaction fees, looking at all of them, it's like the lowest. So if you're looking for like a payments aspect, that is a proof of work. I mean, Litecoin's pretty darn good. Will it fade? Well, it seems to fade. And then, it'll probably just stick around because it's been there for a long time, unless something else comes in that's awesome. But sure, I can see it doing quite well. And even if you wanted to invest, I mean, look, last all-time high in 2017, it reached $340, $355. And then it went right back up to 384 in the last bull cycle. So I don't know what it is today. $100. I mean, you want to throw some money in there. It'd be interesting to see if it can reach that again like it did the last 2 cycles, but that's not financial advice. It's just something to look at.
I think to pick up on what you were saying, Rob, one of the beauties of Litecoin, I think, is its simplicity, isn't it? It's not something you have to work particularly hard to get your head around. It's a transfer of value. It's a payment coin. You know, it's not sort of claiming to do anything particularly extraordinary. It's just for transferring value, and I think it does get used a lot for that.
Sure.
Maybe not so much in the West, but I think it's popular, certainly in other regions that we may sort of tend to overlook. So there's that. There's also, interestingly, now that I remember it, Litecoin and Dogecoin use the same script mining algorithm. So if you mine Litecoin, you can also mine Dogecoin, and which obviously gives kind of an extra incentive to mine Litecoin, and with repercussions for decentralization and security and what have you. So that could be something to watch as well. Could as the Litecoin halving approaches, and assuming sort of Litecoin continues to pump, could Doge pump as well? I think that might be an interesting one to watch.
Sure.
Another thing that Litecoin has going for it is that it's only 94% down against Bitcoin over the last 9 years, as opposed to being like 95 or 96% down. So yeah, there's always a silver lining, right? The silver lining of it all. The next thing I'd like to talk about is Ethereum, and this has been one of the it's kind of like inflation, right? Like it's sticky, it's staying up there at the high end of the range, and I'm trying to figure out, are there any reasons to be bullish on the Ether Bitcoin valuation right now? I know we can often get into sort of like a trance where you kind of like only see one potential outcome, but obviously both potential outcomes exist. So I'd like to talk a little bit about that and try to figure out, what is the other case for the Ether Bitcoin valuation. Rob, you want to take this one first?
Yeah, sure. So there's this thing I've been talking about. It's called Bitcoin dominance, and it seems to do quite well as all the alts start to fade. And like even today, if we take a look at without stable coins, we're looking at a 56% dominance, and then with stable coins, depending on where you look at, it could be 50%, or in TradingView, I think it's like almost 52, 51, 52%. So, I mean, the dominance itself, it's going through that stage. And then if you're looking at a TA perspective, there's this guy, you should follow him. He's right there. And he did this great video about the coming collapse, and look at him just yelling his head off as it starts to just kind of fall through. And you look at the TA, I mean, it makes a lot of sense, right? It's lower lows and higher lows. So
lower highs.
Lower highs. So you can tell how much I put in a TA. So yeah, I can just see as it starts to degress and go through. And let's be honest, we haven't seen a lot of the narrative, because before we had there was the merge that just came about a year ago or so, or how long it was, and that really did pump things up. And now we see things that are going on with Ethereum, the things that we talked about offline about Polygon and layer 2s. I just don't know if Ethereum has that in it. And then also there's another, I don't know if there's a narrative out there, correct me in the comments section, that could really push up Ethereum right now to what it's doing. I mean, even Vitalik Buterin came out and said, you know what, I don't really like to stake my Ethereum because those multi-sig wallets are very difficult. And I got to tell you, as a business owner, if I have a product and I personally don't want to use it, it's not really a good sign. And I'll just leave it like that.
I mean, yeah, like that was something I was thinking about too. But see, here's the thing, like, just to keep myself honest here, right? Like, I was also bearish on Ether Bitcoin in May of 2022, and it collapsed, right? And then I feel like I let my ego sort of take off. And then what happened is that the Ethereum Bitcoin valuation just went right back up, back up to 0.085 or something. So I'm trying to figure out, like, Guy, do you see any potential? Because like back then, I felt like I missed the merge narrative, right? Like, I mean, I knew the merge was coming, but I just didn't think it would change anything in terms of the valuation. Am I missing anything today? Like, is there something that we should be saying, like, look, like, yeah, maybe it looks bad, but perhaps we're not considering this one specific thing?
I think there are a couple of things that you can bear in mind. I think only one of them would be enough to sort of change the narrative dramatically, and that would be if ETH were to get labeled as a commodity. Now, I know there's been disagreement between the CFTC and the SEC on this one. I'm not particularly confident that disagreement's going to get resolved in ETH's favor anytime soon. But nevertheless, if that were to happen, because remember, there is huge institutional interest in ETH, both as for staking, for yield, as a speculative asset as well. And if that commodity designation were to come about, that could really supercharge ETH. However, I'm not too confident that's going to be resolved anytime soon. But nevertheless, it's something to be aware of, I guess. The only other thing that could sort of favor Ethereum perhaps in the short term is the next kind of big upgrade, which is proto dank sharding. Which we've just sort of putting out an Ethereum update video in very soon, so there'll be sort of more about it in that. But proto dank sharding, if it's successful, will make Ethereum, in theory, a lot sort of more. It'll have big implications for scalability and ease of use, cheapness of use, gas, also for layer 2s, etc. So that's a pretty big upgrade coming Ethereum's way. So that's something to again bear in mind. That said, I don't see ETH outperforming Bitcoin anytime soon. I think we're going to see Bitcoin dominance continue to rise, as I'm sure you'll be delighted to hear, Ben. But yeah, I don't think there's anything particularly likely to alter that narrative in the short term, at any rate.
Yeah, there is one thing though to kind of come out with another side of it. Just because we talk about how Ethereum might bleed to Bitcoin, and it might be a good play. The things that Guy talked about, I mean, it could happen. There's also those variables. So there's another option you can do. You can just take a look at like those time and risk bands, and just see like how things are going as far as the riskiness that is Ethereum, and start to, like I do, like dollar cost average in and out. So like I just take a look at this and just take the biggest that we're right in the middle, time and risk bands for Ethereum, and maybe you decrease it as it starts to heat up as far as your dollar cost average, and then maybe you start to layer in heavier as it starts to get less risky. So there's always options as far as investors go. It just depends on what your risk tolerance is and where you want to go.
Yeah, I mean, I think it's important as investors, like if you have a thesis on something, like we all develop, right, to constantly figure out like how could it be wrong, and that's why I'm interested, because I still remember last summer thinking it was gonna drop, and then it did, and then it just went right back up. So I'm still living the ghost of that narrative. But let's keep it moving. One of the things we don't really talk about here a lot is the NFT world, and NFTs have been a very interesting part of the cryptoverse. In fact, NFTs could be one of the reasons why Ethereum has remained so resilient, right? Like if you're someone who's in the NFT space and you want to go buy an NFT, a lot of times you're going to buy ETH to go buy that NFT. But recently, we've seen that the floor on a lot of the more popular NFT projects, they've been going down. And I guess the question is like, do we see it ever coming back, right? Like this is one of those things where, from one cycle to another, you would expect altcoins to drop 95%, 98%. You would expect NFTs to drop a similar amount. The issue is like which ones actually come back, right? And that's what we can't really know. But do you see in general, right? Do you see the NFT space being a space that will come back in its prior form, or do you think it will come back in a new form? That's what I'm trying to get at. Guy, why don't we start with you on this one?
Yeah, it's interesting. I was kind of watching the comments there to see what people would say about NFTs. I think it's one of the most divisive divisive topics in all of crypto, isn't it? Some people, it's enough just to hear those three letters and they're off. I think, I think the NFT space is having a rough ride at the moment. It just seems to be constant sort of bad PR. Obviously, there's all the talk of things like, you know, these plummeting floor prices for these so-called blue chip collections. There was also this Azuki's disaster last week or the week before. Did you guys kind of follow that at all?
Yeah, I saw that. Yeah, only like 10 minutes to mint them, and then it just collapsed. Oof, bad news.
Yeah, and the artwork was similar, very, very similar to the previous collection, and in some cases almost identical. And it's bad. It's moments of bad PR like that. You think, gosh, these things are doomed. Having said that, I don't think a unique representation of something on a blockchain is never not going to be important. I'm not sure. I don't think we're likely to see the craze come back in the same way that it did, at the height of when was it, last year or 2021. I still think we're only just really starting to explore the utility for NFTs, and obviously the expensive JPEGs are the ones that hog all the headlines, and I think that's a real shame because there's so much more use to them than that. I mean, for instance, things like unstoppable domains and the Ethereum name service, those domains are represented as NFTs, and there's a real genuine use case right there. And that's just one. I've chatted to a few NFT experts here in Dubai and elsewhere, and so many of them say it's like, yeah, you've got to move away from this idea of PFPs. They are still going to be a thing because people still want that provable scarcity. They still want something to identify themselves with online. Whether we're going to see I don't think we're going to see the kind of crazy prices that we saw for PFP NFTs in the future. I think probably that era is gone, and good riddance to it, really. But the idea that the NFT space as a whole is going to die, I think is not true at all. I think it's going to grow massively over the years as we find more uses for them, and as people's digital lives continue to expand. And that's the other thing that so many of these NFT experts, these people who spend so much time in that sort of corner of Web3, always say. It's like, look to the coming generation, and it would be fascinating to get the views of someone sort of, in their 20s on this, or even in their teens, because I think they are going to be able to really adopt this technology and take it to new places. And it could be, it could line up sort of perfectly for them, the kind of next NFT craze when they're sort of all coming of age, as it were. So yeah, NFTs, they're not going anywhere, but I think we're going to see an end to that hype, and hopefully, I must say, an end to some of the, what would you call it, the behavior of NFT holders. I remember at the peak of that NFT craze, the cringe factor was just unbearable. These sort of dreadful looking parties, these really obnoxious people on Twitter, which, let's face it, I mean, crypto's never short of a few of them. But yeah, I think I'm certainly not going to mourn this passing of the NFT phase, but yeah, we are only just getting started, I think.
Have you seen that meme where it's like this guy is like, when your NFT is not worth 1 ETH anymore, your 1 ETH is not worth 4K anymore, and your 4K is not worth 4K anymore.
Yeah, that's right. That's exactly it. I got it, and I'll make this quick. I agree with everything that a guy talks about as far as NFTs go. I remember there was a thing called ETH Rock or something like that, Ethereum Rocks. And they sold for like 100 ETH. I'm like, that's ridiculous. It'll do well. There was a couple use cases. Like, I think it's gonna be big in gaming, but there was another use case I thought was very interesting. Like, you can purchase an online membership for your favorite website, whatever it is, and you could buy that lifetime access. And then when you're like, I don't need this anymore, then instead of you paying every month, or you have one lifetime access and that's it, you could actually go and sell that lifetime access to that website or to whatever it is on a secondary market, and you can make some of your money back. I think like you take a look at that, and then like with real estate, to be able to put deeds and things like that on the blockchain, which would reduce the amount of funds that we have to actually pay when we do a closing for real estate. I think it'll work out pretty well. It's just getting there. And right now it's kind of crap.
Fair enough. Yeah, I do wonder sometimes if there will be like a case study in 100 years where people are trying to figure out why like some NFTs, like why JPEGs were selling for $500,000, right? Like, and trying to understand like, how did we get to a point like that? You know, is it, you know, was it all just one massive JPEG bubble, or you know, is it the new normal? And that's kind of what we're trying to get to the root of. Anyways, the last thing I'd like to talk about, and Rob, will start with you on this one, is, you know, the whole recession narrative has been there for quite some time, right? And I mean, I think for the most part, a lot of indicators, while they suggest one's coming, there's plenty that kind of say, yeah, like maybe it's coming, but it's not here yet. Like, what are your thoughts about this? Like, is there any reason to be worried about a recession now narrative, or do you still think it's somewhere off in the nebulous future?
Before yesterday, I'd be like, well, it's, you know, it's coming, but it's not going to be a big deal. The thing that scares me is that the FOMC meetings came out, and the Fed said it's going to be a mild recession. I'm like, oh my God. It's almost like when Kramer says something's going to happen and it does the exact opposite. I'm like, if they say it's going to be mild recession, it's probably going to be awful. But that's just me blowing things out of proportion. I will say, like, if you look at certain factors, like, so we own a bunch of, like, I mean, just anecdotally, we own a bunch of Airbnb properties, and you can see that there was a tweet and information that was put out. It talks about revenue collapse in the top 10 cities as far as like people not using Airbnb as much, and it drops off like, you know, 50% or more. But then there's that part that kind of causes fear. But then there was a piece that was put out by Airbnb, and they said, no, that doesn't match our numbers. The numbers that they had was from a separate website. So like for me personally, like me and the wife, we've seen a drop off, but it's not like 47%. It's like 15 to 20% year over year for our different properties. So I would say like there's just that part. But if you look at like the data, like again, pulling your website, like you take a look at like auto loans, it's pretty much flat. So people are still buying vehicles. And if you take a look at initial claims, I know you and Gareth talked about this. I mean, there's a slight uptick. Unemployment, a slight uptick a little bit. But then if you take a look at like housing, as far as like housing sold, there's still a reduction in the inventory of housing. And you can just see how it kind of drops off a little bit. Not like what you would see in a recession where there'd be like a massive amount of inventory just hanging around because it can't get sold. And you take a look at sale prices of household, it's still massively high. Zillow home value has dipped a little bit, but came back up. And then another thing is treasury yield curves. I mean, look, a 6 month is at 5.52. And then we're at a 30-year at 3.95. So like if you take a look, it's kind of like a little bit inversion of what it is. So I think there's a popular term, rolling recessions. A rolling recession where like you see different parts of the sector of the economy starts to have like a little bit of recessionary factors, but then it just kind of passes it on. And we saw that in automobiles. Automobiles are kind of coming up. We saw a little bit in housing, and you're going to see that in commercial property. That's going to collapse. I mean, from everybody that I've talked to.
Can you go back to the automobile loans and look at the year-over-year percentage change? I haven't looked at that one in a while. I'm just curious if you look at year and then click on percentage. How does that look? Okay, so it has gone negative recently. Yeah,
it has gone negative. That's true. But we can take a look at it. It's like it's negative. What are we taking a look? 0.8%.
Yeah, it's still pretty mild.
Yeah, I mean, it looks pretty bad, but we're taking a look at a different way. Let's take a look at now, same thing. So, but regardless, I still think that I still personally think that we're going to see a little bit of a recession coming through. Maybe the Fed's right and we'll have it's mild, but they haven't really done too well as far as like with inflation and that being transitory. So we'll see. But again, everything that happens, you have to remember, everybody's watching, even though that we go through recession, there's opportunities to be had. So if you're sitting on cash, that's a great opportunity to get into some different types of assets if you really want to, and you can do that. not financial advice, but everybody who I know made a bunch of money in real estate was in 2008 and 2009 when everything went underwater.
See, I think it'll be really interesting to revisit your personal take on Airbnbs in like 3 months and see if the revenue is coming back to where it was previously, or if it's kind of where it is now, or if it's still trending down. You know?
And I will say this: a lot of people get into Airbnbs, and there's these groups that we're part of, and there's so many new people that are coming in. The problem with the new people getting in Airbnbs is that they have a loan, they have a mortgage. So when they do that and they don't have a lot of people coming in, you got two options. You got to stop doing short-term rentals and do long-term rentals, or you got to sell. And if that happens, where there's a bunch of sale being put up, then we're going to see a little bit of a problem. See, for us, that's not the issue because we just bought things outright, so there's no mortgage. So for us, it works out pretty well because we can just drop the rates and we still make money. But for other people, it's going to be, I think, a big problem if you see that issue. So,
as a real estate guy, do you agree with the statement the real estate cycle is the business cycle?
It's a funny thing because, like, if you take a look at the recession for like the .com era, you didn't see actually housing prices and housing market did go up a little bit in 2000, 2001. But when it was the central focus in 2008, 2009, it was, of course, it went right in line with the recession. And then in 2020, you can see it a little bit but that was a little bit different circumstances. I think that it's part of it. It's part of the narrative, but you also have to take a look at a lot of different factors. It's not just all multi or just single faceted. It's multifaceted to me.
Fair enough. Guy, where are you on the recession now? Like, is there reason to be worried about recession now, or you still see it as, sometime in the future, not immediate?
I was a bit more concerned about it until I saw the jobs data sort of shortly before we came on air. I think you just added 500,000 jobs in the US according to the latest figures, which is kind of extraordinary. Caused crypto to dip a bit. I'm not quite sure how you've managed to do that. I should also point out for the sake of balance as well, for the sake of perspective, that Europe, of course, is in recession. And there's a lot of talk about places like the UK sliding into recession before long. Lots of places are teetering on the edge. That said, for the US, the data, the recent data does seem relatively good. Inflation is coming back down. It's kind of slow, and core is kind of sticky, but it is coming down. And as a result, the US seems to be weathering the storm fairly well. That could have something to do with the trillions of dollars of liquidity that are still in the system, and because obviously lots of people are out of money, but that money, that liquidity, that money that came from things like, for instance, pandemic stimulus, that's still sloshing around in the economy. It's mostly found its way, I think, to kind of richer people, institutions and what have you, who managed to lock in some debts at low rates. But I think there is still this danger, and I think probably as you guys have been discussing, I think the danger probably does lie in real estate. We talked a bit on the channel about commercial real estate not that long ago, and the research we did throw up the fact that there seems to be at least one very big bank in the United States. I'm not going to spread FUD and say which one, but at least one very big bank that could possibly go under because of its commercial real estate loans. That's that there is that kind of iceberg out there, and of course we've still got the prospect of higher rates. The Fed meeting, the Fed minutes, which I think you touched on, Rob. There seems to be there's consensus now for 2 more rate hikes to come this year, and it's not all that often you see that broad consensus from the Fed. I think it's more it's kind of common to see dissent, I think, from Fed officials. But I think from what I've only kind of skimmed over the summaries of the latest minutes, but it seems like Fed officials are pretty much unanimous that there are going to be 2 more rate hikes. So that's all stuff to consider. But then I come back to that first point. The labor market in the US just is still so strong.
It's interesting because you're right. I mean, I actually hadn't seen the report yet. The ADP report is not always the most accurate. I think the bigger report to be interested in will be the one that comes out tomorrow, where we actually get like the unemployment numbers and that sort of stuff. But you're right. I mean, I was looking at it, 497,000 new added jobs versus 220,000 estimated. I guess it's no surprise that you see things like TLT down. You see the 10 years up, the 30 years up. Inflation is sticky, and the Fed has a difficult job to do. But what's interesting is, I think both of you, or at least I know Guy mentioned 2 more rate hikes. What's interesting is the market still doesn't necessarily believe that. If you were to look at the CME Group stuff, I still think they're pricing in only 1 more rate hike. So it's kind of one of these things where it's like the market just continues to refuse to believe what the Federal Reserve is saying. And we talked about over a year ago, we talked about the Fed going up to 5.5%. And that view was not a very well received view. And now the risk is that prediction was too conservative, like maybe they go beyond 5.5%, which is an interesting take. Anyways, if you guys have any questions for any of us up here, leave them down in the comment section. We'll try to go through as many as we can. I think I saw some questions that were coming in earlier. Someone, let me see if I can. So this is my first time using StreamYard, so it looks like I can even put the comments.
You're a natural, Ben.
Yeah, I know. It looks like some people can, or I can even put comments up on the screen, which is crazy.
Yeah.
What type of technology is this?
If you see that comment that's speculating that I've been dyeing my hair, I'd like to take this opportunity to refute that utterly in the strongest possible terms. It's the lighting in here. And I should say that I still, there's a bit of grey in there if you look closely, but this is all natural, people. That's slanderous speculation. Anyhow, are there any?
Don't spread beer FUD.
There's definitely more grey coming through. Bear markets will do that to you.
Just wait. Look at me. I'm only 23.
All right. We have a question. How high can gold go?
Gold is sort of around all-time highs at the moment. What actually is gold at right now?
Well, I think it's pulled back a little bit recently. Well, the last time I looked, it was at like 1920. It's at 1912 right now. So it's a little bit off of its highs. But I still think that I still think it's pretty long-term bullish is my guess.
Didn't either a country or BRICS come out and say that they were going to denominate some different funds in gold and they're going to hold it?
Yeah, I mean, there's been talk of a BRICS currency, hasn't there? That backed by gold. That narrative's been sort of doing the rounds for a while now. But I mean, it's hard to know whether that's genuine or whether that's kind of more sort of being put out there to sort of FUD the dollar, as it were. But right. I mean, I think I think the trend towards de-dollarization, I think that could be good for gold. And remember, of course, the business with Russian assets being frozen in the wake of the invasion. I think that could well prompt. I think that's made a lot of countries and a lot of people, individuals and institutions, aware of the dangers perhaps of or the risk inherent in some assets, particularly if they're US dollars or dollar denominated. So I think that could definitely be strong for gold as well.
Yeah. If you look at how like Bitcoin tends to bounce off its like 20-week SMA or 21-week EMA in a bull market. It's interesting because gold does something similar, but it's more so on a longer term. It's like the 20-month moving average, 20-month estimate, 21-month EMA. You'll see in prior bull markets for gold, it'll hold those levels. It just moves at a snail's pace, right? Like it takes it a year to move a few $100s, and that's considered, of course, a bull market. Because I mean, the percentage gains is what we should be talking about, but it's relatively small percentage gains. But I think it's actually quite bullish. I mean, it could pull back to as low as the 1840s, but I still think it will, because that's where the 20-month is. But I still think it's doing pretty well, and I probably will do well when we get back to QE, is my guess. All right, let me see if I can find another. Someone says, "Don't FUD guys' hair."
Absolutely right. Thanks, Onitaz. I appreciate it.
Someone says
times are hard enough as they are.
Someone says we need a good Bitcoin dump again. This 30K crab market sucks. Yeah, what do you guys think's going on right now? Because Bitcoin's hanging out at around 30K or so. It has been for a little while now. Alts are still stuck in traffic on struggle street. What's your views here on Bitcoin at 30K?
I still am under the impression, or under the feeling that the 4-year cycles are intact. And we're going to see in 2024, I mean, your buddy Bob Lucas thinks we're going to see an all-time high in 2024. And so it's either going to happen 2024 or 2025. And it really comes down to this ETF. If the ETF gets rejected, you better believe we're going to see quite a big dip. So, I mean, to me, I think I'm hoping for it to go lower because I'm still accumulating in this stage. So I see how it can, but if the ETF gets approved, short term, the price will go up. The question I have is, institutions don't play like us. They buy OTC. Does that move the market, or does retail move the market?
Yeah, I still kind of think that alts are responsible for at least part of this rally by Bitcoin, right? We can see alts are down on their Bitcoin pairs. That's kind of what I think has been going on. Let's see. Guy, now that you mentioned your hair, now everyone's talking about hair. It's kind of funny because now people are talking about your hair and not my hair, because normally they talk about my hair because about the recession. So someone says
I wanted to take some of that flack from you, Ben.
I appreciate
it's not fair. You always have to deal with the hair FUD.
Let's see what else. Someone says gold and the S&P are both going to 3,000. Now that's an interesting view. Obviously gold to 3. I mean, I could see it. It's possible, especially because I think precious metals like gold can do actually really well in a recession. So I think the question is well, if we do get a recession, and everything's tanking, you might see the risk off assets like gold do quite well. But that's an interesting viewpoint for sure. Let me see. Do you think that Bitcoin can ever go back to 19K?
Ooh. Rob, you'd like that? As you've often said. I wouldn't mind it. I think that would be a great opportunity. I kind of missed the opportunity around in the wake of FTX. I was kind of waiting for it to go even lower. So can it go back to the low of 19K? I mean, I don't think you can rule anything out these days, especially I think with going back to what we were talking about with that kind of crabbing sideways around 30K. I mean, I think a lot of that is due to really low liquidity, and also the cutting off of things like the SEN, the Silvergate Exchange Network. It's much harder for institutions to move money in and out of crypto now, and I think that's one of the reasons. I mean, that's the reason why generally at the weekends these days, the market is very stagnant, and I think that could be something that's weighing on it now. The fact that institutions just can't get in and crucially get out as easily as they would like. So I think there's still a chance that it could go back to low 19K. Back to around 19K. I don't personally think it will. But if there's one thing I've learned over my years in crypto, it's never to rule these things out.
Yeah, I think it's possible for sure. Because I mean, again, the last two cycles, we have our bear market years, right? 2014, 2018, 2022, but we normally get sort of a secondary scare before the next move to new highs. And in 2015, that secondary scare occurred in August of the pre-halving year. So it would be next month. And by the way, it dropped 50%, and it was a double bottom. 50% drop from 31K puts you at 15.5, which is a double bottom. Not saying that has to happen, but I mean, I think the way that you would get there is if a recession actually materializes, right? I think that's probably how you would get there. But yeah, like it is possible. And last cycle, it took until Q1 of the actual halving year. So I think probably sometime between that Q3 and Q1 is sort of the window for it to happen if it's going to happen.
Yeah.
Rob,
Let's hope so.
We'll see. All right, let's see. Any more questions? We still have about a few more minutes.
See, this is nice. We got done early because like last time people were complaining like, hey, we don't get to ask any questions. And so we try to hurry things up. So here you go. Here's your shot.
Here's a good question. So if the Fed is able to give us a moderate recession, what would have to be in place to achieve that? I think one issue here is that, the Fed only has a certain amount of tools that they even can use to try to cause a recession. And so what do you guys think would need to happen for actually a recession to occur? Because I mean, Rob, you're talking earlier about the Airbnb stuff. I mean, like, yeah, you're down in some revenue on it, but is it really enough to call it a recession? Could it be though in 3 months? Could it be in 6 months? What do you think needs to happen for the recession to actually occur?
If the Fed, if it's just the Fed doing their thing, they have to raise like 50 basis points, 75 basis points on a shot and go, and Jerome has to come out and say, look, we're sorry, but it's much more sticky than we thought it was. We don't want to be like in the 70s with Volcker. So we're going to have to raise it this X amount. And then you'll see people, and then some of the market will react, but there's always this part of the market that just is like, and we've seen this time and time again, part of the market is like, we don't believe you. You're not going to do it this time. And then they do it and like, okay, you won't do it this time. And it just keeps playing out. So I think, I mean, look, if we keep adding jobs and those initial claims, if they're not going up dramatically, meaning that the unemployment rate's not going to go up dramatically, what's the Fed going to do? So like I said, there's only one tool there. Well, actually, there's two tools. They can raise rates, and then they can start to, quantitative easing, quantitative tightening, and take things off the balance sheet. But it's going to be very difficult for them to do all these things without collapsing everything. And not to mention, in a presidential election year coming up in 2024, good luck with that.
Yeah. Guy, did you have a take on this as well?
Not much to add, really. I'm kind of with Rob. I think Jerome would have to just turn that rhetoric up to 11 and really, really commit to raising rates even further. Other than that, yeah, I'm not sure there's anything else.
I almost wondered too if there's this like component of like, because I don't know about you guys, but I've actually enjoyed the fixed income investment asset class, like, because it hasn't really been available to me in the past because I was in high school the last time rates were interesting. But I also wonder, like, at what point does it become inflationary itself, right? Like if I can go out and just earn 5% risk-free or 6% risk-free, then could that eventually contribute to inflation as well? Because it's not one of those markets that you have to constantly worry about, like, is it going to go up or down? You can just kind of sit comfortable knowing that you're earning this risk-free rate. So I do wonder if there's an element of inflation that could even come from having interest rates be too high. I also wonder too if we've talked about net liquidity before, and the ECB balance sheet just dropped a lot yesterday. And a net liquidity is, if you add up all the central banks and subtract out reverse repo and the TGA, net liquidity is actually getting pretty close to the lows from last year. It wasn't close, but now it's actually getting pretty close. It's also interesting too, because I don't even know, but today might be the day where the balance sheet by the Fed goes below where it was in March, because they release it, I believe, Thursdays after the close, and we're already sitting at that low. So I'd be curious, because again, I think in markets, liquidity is everything. So as liquidity dries up, altcoins get hit first, then ETH, then the king, right? Speaking of, we have one final question for Rob, because he's going on about the dominance quite a lot. So here's a good question. He says, or this person says, it seems that the Bitcoin dominance often changes direction in September. What type of events do you think could happen this year to cause it to turn around in September? Rob, I'll let you take this one.
Yeah, well, I mean, you gotta understand. I mean, Bitcoin dominance has only been going up, and that's if we include stablecoins. So, I mean, the thing is, what's the narrative and this is what I always think about, because I'm more of, I mean, there's TA people, there's fundamentals, and there's people who take a look at the narratives. I'm one of those guys. I look at it, I'm like, what's the narrative for altcoins? I mean, it's super risky to get into it right now. I mean, if you want to do it, but that's what I do. I don't think everybody's like me. Like, I'm still dollar cost averaging into certain altcoins because I feel like they're a bigger gainer in 2 or 3 years, which is where I really care about. I don't care about the end of the year. I don't care about 2024. I care about 2024 and 2025. So as far as Bitcoin dominance goes, I mean, if we're talking about what America, I mean, here's a narrative. The SEC is going to come out and say, we think it's a commodity. It's probably going to go that route. Ethereum could have been a commodity before it went from proof of work to proof of stake. Who knows where it's going to be now? And then for the rest of the altcoins, and I say this take it with a grain of salt, because I want everything to go down. So maybe I'm just biased. So that's where I think it is. I think the bigger gains though later would be altcoins as opposed to Bitcoin.
History would support your view on that. I guess we'll see if the altcoin market can rejuvenate itself at some point. I think the issue is that the altcoin market just can't. I mean, it can't be bothered to do much of anything right now, right? Like they're bleeding against Bitcoin, they're bleeding against the U.S. dollar. You have Bitcoin at yearly highs while altcoins are at basically their yearly lows. A lot of them are, right? Well, if you think about it, like a lot of the altcoins are closer to their yearly lows, or even their cycle lows, than they are to their cycle or to their yearly highs. Because I mean, even like things like Cardano were pushing 45 cents back in April, and now they're at like 28 cents, 29 cents, and the lows are at like 22 cents, 23 cents. Same thing could be said with Avalanche and Polkadot and Chainlink, right? And the list goes on and on. So I think that's the issue, is that these altcoins are really struggling to catch a bid. And the reason is because I just think liquidity is getting sucked up. And when liquidity gets sucked up, it's the altcoin market that gets hit first. But as Rob said, and I'm sort of paraphrasing, right? But when liquidity comes back, what tends to do the best? It's those riskier assets, right? Like it is those altcoins. And that's what Rob, I think, is sort of counting on for the next cycle, is when the liquidity actually comes back, or even maybe before it comes back, just when we get to the point where it seems like it's about to come back. That's normally where those oversized gains from the altcoin market comes from. It's because they got decimated when liquidity was taken away. You just give the market their drug back and the QE, and then those risky assets take off.
Right. I'll just say one thing, is that everybody who's watching, you probably have been in here for a while, but if you're not, I couldn't do this in 2017. I couldn't do this. I could barely do it in 2018. But after 6 years of being in this space, 30, 40, 80, 90% doesn't bother me too much, because I think about the future. So if you are sitting there and those numbers do bother you, you shouldn't be investing more than you can afford to lose. That's the big thing.
There's probably a lot of truth to this comment. There's probably a lot of truth to this comment. I'll say it's worked out so far, but it's probably not going to work out forever. So I think in the long run there is some truth to the comment of DCA strategy, but I think the DCA strategy now has been better suited for Bitcoin over the altcoin market, right? I just think that's eating the altcoin's lunch, and we'll probably continue to do so. Why don't we go ahead and wrap it up there? It's the top of the hour, so we want to wrap it up. We don't want to take too much time. If you're not subscribed to Guy or Rob, make sure you go subscribe to them. Links should be in the description below. And I believe next week we will be on Rob's channel, right, Rob?
Yeah, and we may do something different next week. Maybe a 3-way stream. We're going to talk about that for this.
Yeah, I mean, I'm fine keeping it the way it is. I don't really care. But let's see how this week goes. I think next week should be an interesting week as well. Next week, for sure, it'll be on Rob's channel. And I want to thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, subscribe to those guys. See you guys next time.
See you, everyone.
Adios.